Welcome to our exploration of how blockchain technology is transforming the world of financial technology, or Fintech. Blockchain at its core is a decentralized digital ledger that records transactions across multiple computers. This ensures that records are secure, transparent, and tamper-proof. In recent years, Fintech companies have begun leveraging blockchain to create more efficient, secure, and innovative financial services. From payments to lending, blockchain is making waves. In this video, we'll dive into the key applications of blockchain in Fintech, highlighting real-world examples and the benefits they bring. Let's start by understanding the basics of blockchain and why it's so revolutionary for finance. One of the most significant features of blockchain is decentralization. Unlike traditional financial systems that rely on central authorities like banks, blockchain operates on a peer-to-peer network. This means no single entity controls the data, making the system more resilient to fraud and manipulation. Decentralization also reduces the need for intermediaries, which can lower costs and speed up transactions. For Fintech, this opens up new possibilities for creating trustless systems where users can interact directly and securely. As we move forward, you'll see how this foundational concept underpins many Fintech innovations. Payments are one of the first areas where blockchain made a big impact. Traditional cross-border payments can be slow and expensive due to multiple intermediaries and currency conversions. Blockchain streamlines this process by enabling direct peer-to-peer transfers that are fast, secure, and often much cheaper. Companies like Ripple and Stellar have developed blockchain-based payment networks that settle transactions in seconds, not days. This is especially beneficial for remittances and international business payments where speed and cost matter most. Let's look at how these solutions are changing the payments landscape. Smart contracts are self-executing agreements with the terms directly written into code. On blockchain platforms like Ethereum, these contracts automatically execute when conditions are met, without the need for intermediaries. In Fintech, smart contracts are used for automating processes such as loan approvals, insurance claims, and trade settlements. This reduces paperwork, speeds up transactions, and minimizes the risk of human error or fraud. By making agreements more transparent and reliable, smart contracts are paving the way for a new era of financial automation. Lending is another area being transformed by blockchain. Traditional lending often involves lengthy approval processes and strict requirements. Blockchain-based lending platforms use smart contracts to connect borrowers and lenders directly, automating loan disbursement and repayment. This peer-to-peer approach can lower interest rates and make credit more accessible, especially for those underserved by traditional banks. By leveraging blockchain's transparency and security, these platforms build trust between parties and reduce the risk of default or fraud. Identity verification is crucial in financial services, but traditional methods can be slow and prone to errors. Blockchain offers a secure and efficient way to manage digital identities. Users can store their identity information on a blockchain, giving them control over who can access their data. This not only speeds up onboarding for Fintech services, but also enhances privacy and reduces the risk of identity theft. Blockchain-based identity solutions are already being adopted by banks and Fintech startups worldwide. Fraud is a major concern in the financial industry. Blockchain's transparent and immutable ledger makes it much harder for bad actors to manipulate records or commit fraud. Every transaction is recorded and cannot be altered, providing a clear audit trail. Fintech companies are using blockchain to enhance fraud detection and prevention, protecting both businesses and consumers. This increased security builds trust and confidence in digital financial services. Insurance processes can be complex and slow, often involving multiple parties and lots of paperwork. Blockchain streamlines insurance by enabling smart contracts that automatically process claims when certain conditions are met. It reduces administrative costs, speeds up payouts, and minimizes disputes. Some insurance companies are already piloting blockchain solutions for travel, health, and property insurance, making the entire process more transparent and efficient for customers. Asset tokenization is the process of representing real-world assets, like real estate or stocks, as digital tokens on a blockchain. This makes it easier to buy, sell, and trade assets, even in small fractions. For Fintech, tokenization opens up new investment opportunities and increases liquidity in markets that were previously hard to access. It also allows for faster settlement times and lower transaction costs. Asset tokenization is rapidly gaining traction in the financial industry. Centralized finance, or DeFi, refers to financial services built on blockchain that operate without traditional intermediaries. DeFi platforms offer services like lending, borrowing, trading, and investing, all powered by smart contracts. Users maintain control over their assets and interact directly with protocols. DeFi has exploded in popularity, attracting billions in value and creating new opportunities for innovation in Fintech. However, it also comes with unique risks and challenges, which we'll discuss later. Trade finance involves complex processes in multiple parties, often leading to delays and high costs. Blockchain simplifies trade finance by providing a shared ledger where all parties can access real-time information. Smart contracts automate key steps, such as payment releases and document verification. This reduces paperwork, speeds up transactions, and lowers the risk of fraud. Major banks and trade organizations are already piloting blockchain-based trade finance platforms. Meeting regulatory requirements is a major challenge for Fintech companies. Blockchain can help by providing transparent and auditable records of all transactions. Regulators can access real-time data, making it easier to monitor compliance and detect suspicious activity. Some Fintech firms are using blockchain to automate Know Your Customer (KYC) and anti-money laundering (AML) processes, reducing costs and improving accuracy. This not only helps companies stay compliant, but also builds trust with customers and regulators. Crowdfunding platforms have become popular for raising capital, but they often face challenges like fraud and lack of transparency. Blockchain addresses these issues by providing a transparent record of all transactions and automating fund distribution through smart contracts. This builds trust among investors and project creators, making crowdfunding more efficient and secure. Several fintech startups are already using blockchain to power next-generation crowdfunding platforms. Sending money across borders has traditionally been slow and expensive. Blockchain-based remittance services are changing this by enabling near-instant transfers with lower fees. These services bypass traditional banking systems, making it easier for people in developing countries to receive funds from abroad. Blockchain transparency and security also reduce the risk of fraud and ensure that funds reach their intended recipients quickly and safely. Stock trading platforms are exploring blockchain to improve efficiency and transparency. By recording trades on a blockchain, settlement times can be reduced from days to minutes. This also lowers the risk of errors and fraud. Some exchanges are piloting blockchain-based trading systems that allow for real-time clearing and settlement, making the process smoother for investors and brokers alike. Peer-to-peer P2P payment apps are increasingly using blockchain to facilitate direct transfers between users. This eliminates the need for banks or payment processors, reducing fees and increasing speed. Blockchain security features also protect users from fraud and unauthorized access. As P2P payments become more popular, blockchain is set to play a key role in making these transactions safer and more efficient. Microfinance aims to provide financial services to underserved populations. Blockchain can help by enabling transparent, low-cost microloans and savings products. Smart contracts automate loan disbursement and repayment, reducing administrative costs. Blockchain's transparency also helps build trust among borrowers and lenders, making microfinance more accessible and sustainable for those who need it most. Digital wallets are essential for storing and managing cryptocurrencies and other digital assets. Blockchain-based wallets offer enhanced security and privacy, allowing users to control their funds without relying on third parties. Many fintech apps now integrate blockchain wallets, making it easier for users to send, receive, and store digital currencies securely. This is a key step toward mainstream adoption of blockchain in everyday finance. Compliance with financial regulations is critical for fintech companies. Blockchain's transparent and immutable records make it easier to track transactions and ensure compliance with laws like KYC and AML. Automated compliance checks can be built into smart contracts, reducing manual work and minimizing errors. This not only helps companies avoid penalties, but also builds trust with regulators and customers. Supply chain finance involves multiple parties and complex transactions. Blockchain provides a shared, tamper-proof ledger where all participants can track goods and payments in real time. This increases transparency, reduces disputes, and speeds up financing for suppliers. Fintech companies are using blockchain to create more efficient and trustworthy supply chain finance solutions, benefiting businesses of all sizes. Additional credit scoring relies on centralized data and can exclude people with limited credit history. Blockchain enables alternative credit scoring by aggregating data from multiple sources, including payment histories and digital identities. This makes credit more accessible and fair, especially for those underserved by traditional systems. Fintech startups are leveraging blockchain to create more inclusive and accurate credit scoring models. Loyalty programs are common in banking and retail, but they often suffer from complexity and lack of transparency. Blockchain simplifies loyalty programs by recording points and rewards on a transparent ledger. Customers can easily track and redeem rewards, while businesses can prevent fraud and reduce administrative costs. Some fintech companies are already rolling out blockchain-based loyalty solutions for their customers. Regulatory reporting is a time-consuming process for financial institutions. Blockchain can automate much of this work by providing real-time, auditable records of all transactions. Regulators can access the data they need instantly, reducing the burden on companies and improving oversight. This not only saves time and money but also helps prevent regulatory breaches. Wealth management firms are exploring blockchain to offer new investment products and improve transparency. Blockchain enables fractional ownership of assets, making it easier for clients to diversify their portfolios. Smart contracts can automate portfolio rebalancing and fee payments, reducing administrative work. This allows wealth managers to focus more on client relationships and less on paperwork. Tax reporting can be complex for individuals and businesses. Blockchain's transparent records make it easier to track income, expenses, and capital gains. Some fintech apps use blockchain to automate tax calculations and reporting, reducing errors and saving time. This is especially useful for cryptocurrency investors who often face complicated tax rules. Escrow services are used to hold funds during transactions until certain conditions are met. Blockchain-based escrow uses smart contracts to automate this process, ensuring that funds are only released when agreed-upon terms are satisfied. This reduces the need for trusted third parties and lowers costs. Fintech companies are integrating blockchain escrow into real estate, e-commerce, and freelance marketplaces. Real estate transactions are often slow and involve many intermediaries. Blockchain streamlines the process by enabling digital ownership records and smart contracts for buying, selling, and leasing property. This increases transparency, reduces fraud, and speeds up transactions. Some fintech startups are already using blockchain to facilitate real estate deals and property management. Derivatives trading involves complex contracts and settlement processes. Blockchain simplifies this by automating contract execution and settlement through smart contracts. This reduces counterparty risk and increases transparency. Some exchanges are piloting blockchain-based derivatives platforms to improve efficiency and reduce operational costs. Auditing financial records is essential but can be time-consuming and prone to errors. Blockchain provides a tamper-proof record of all transactions, making audits faster and more accurate. Auditors can access real-time data and verify transactions instantly. This not only saves time but also increases confidence in financial statements. Asset management firms are using blockchain to improve transparency and efficiency. Blockchain enables real-time tracking of asset ownership and transactions, reducing the risk of errors and fraud. Smart contracts can automate fee payments and compliance checks, freeing up resources for more strategic work. This helps asset managers deliver better service to their clients. Digital securities or security tokens are financial instruments issued and traded on blockchain platforms. This allows for faster settlement, lower costs, and increased transparency compared to traditional securities. Fintech companies are launching digital securities platforms to make investing more accessible and efficient for everyone. Payment settlement between banks and financial institutions can be slow and costly. Blockchain streamlines settlement by enabling real-time peer-to-peer transfers. This reduces the need for intermediaries and lowers transaction fees. Major banks are already testing blockchain-based settlement systems to improve efficiency and reduce operational risks. Foreign exchange, forex trading involves converting currencies and settling trades across borders. Blockchain enables faster, more transparent forex transactions by recording trades on a shared ledger. This reduces settlement times and lowers the risk of errors or fraud. Some fintech firms are using blockchain to offer more efficient and secure forex trading platforms. Invoice financing allows businesses to get paid faster by selling their invoices to investors. Blockchain makes this process more transparent and secure by recording all transactions on a tamper-proof ledger. Smart contracts automate payment releases, reducing the risk of disputes and delays. Fintech startups are using blockchain to create more efficient invoice financing platforms. Raising capital is a major challenge for startups and small businesses. Blockchain-based fundraising platforms, such as initial coin offerings, ICOs, and security token offerings, STOs, allow companies to raise funds directly from investors worldwide. This increases access to capital and reduces reliance on traditional venture capital. However, it's important to understand the risks and regulatory considerations involved. Risk management is crucial in finance. Blockchain provides real-time data and transparent records, making it easier to identify and manage risks. Smart contracts can automate risk assessments and trigger alerts when certain thresholds are met. This helps fintech companies respond quickly to potential issues and protect their customers. Peer-to-peer lending platforms connect borrowers and lenders directly, bypassing traditional banks. Blockchain enhances these platforms by providing transparent records and automating loan agreements with smart contracts. This reduces costs, increases trust, and makes lending more accessible to a wider audience. Digital assets such as cryptocurrencies and tokens are native to blockchain platforms. Fintech companies are building services to help users buy, sell, and manage these assets securely. Blockchain ensures that ownership records are transparent and tamper-proof, reducing the risk of theft or loss. This is driving the growth of digital asset markets worldwide. Financial inclusion is about providing access to financial services for everyone, especially the unbanked. Blockchain lowers barriers by enabling low-cost, accessible financial products. Mobile-based blockchain wallets and lending platforms are helping people in remote areas participate in the global economy. This has the potential to lift millions out of poverty and drive economic growth. Regulatory sandboxes allow fintech companies to test new products under regulatory supervision. Blockchain is often used in these environments to pilot innovative financial services. The transparency and auditability of blockchain make it easier for regulators to monitor tests and ensure compliance. This encourages innovation while protecting consumers and the financial system. Data privacy is a growing concern in fintech. Blockchain gives users more control over their personal data by allowing them to decide who can access it. Decentralized identity solutions and encrypted records help protect sensitive information. This not only improves privacy but also builds trust between fintech companies and their customers. Charitable donations often suffer from lack of transparency and trust. Blockchain addresses this by providing a transparent record of all donations and how funds are used. Smart contracts can automate fund distribution, ensuring that donations reach their intended recipients. Fintech platforms are using blockchain to make charitable giving more transparent and efficient. Cross-border trade involves multiple currencies, regulations, and intermediaries. Blockchain simplifies this by providing a single shared ledger for all parties. Smart contracts automate payments and compliance checks, reducing delays and costs. Fintech companies are using blockchain to make international trade more efficient and secure. Blockchain offers many benefits for fintech. It also comes with challenges. Scalability, regulatory uncertainty, and security risks are major concerns. Blockchain networks can become congested, leading to slow transactions and high fees. Regulatory frameworks are still evolving, and security vulnerabilities can be exploited by hackers. Fintech companies must carefully assess these risks and implement robust solutions to ensure safe and reliable services. Looking ahead, blockchain is set to play an even bigger role in fintech. As technology matures and regulations become clearer, we can expect more innovative applications and wider adoption. From digital currencies to decentralized finance, blockchain will continue to drive change in the financial industry. Fintech companies that embrace blockchain are likely to lead the way in creating more efficient, secure, and inclusive financial services for everyone.